It's about that time of day again. My name is Joseph. Wednesday evening, November 28th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple and reliable three-step trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in my trade room. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bearish at the low of a trading range. That tells me to look for buying opportunities, but this momentum is way too strong to start buying now, so I'm going to wait for that nested two-try failure for tomorrow morning. Over on the S&P is bullish with a big spike and channel pattern tonight, and we're just a few points away from testing last week's high. That's a major level of resistance, and time is running out. So my plan is to look for bear traps below the moving average on the S&P tomorrow. Over on the Nasdaq is bullish with a spike and wedge tonight. That means as we go higher, the more likely we are to get a nice deep pullback. So I'm waiting for that deep pullback on the Nasdaq. We're looking for seller failures just below those prior swings on the Nasdaq. Want to stay tuned for more on that chart in a moment. Gold is bullish and back into the range. Surprise, surprise. So I'm going to be focused on buying, but I want to buy just below that range. And of course, anytime we talk about a range, we're talking about two-try failure patterns on the yellow metal for tomorrow. And we'll wrap it tonight on the euro. Euro is bullish with a strong spike higher, and I'm waiting for buying opportunities off the low of a hidden channel for Thursday morning. Speaking of Thursday, we have a bunch of spikes on the chart. We just finished hearing from the Fed Chairman Jerome Powell this afternoon, and all hell broke loose. We've got a bunch of spikes to deal with tomorrow, some going with the trend, some going against the trend. So tonight, we're going to talk about the 4 most reliable ways to trade a strong spike on any chart. And as always, I've got a great newsletter in store for you guys and gals tonight. Plenty of reliable opportunities setting up for Thursday morning session. But before we jump into the charts tonight, I need to remind you, make sure you never miss a video by joining our mailing list. There's an opt-in form right on the homepage here at Sideways Markets. Give me your name and your email address, and I'll shoot you an email every time this nightly newsletter goes live. Also, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts from tonight's video. If you're here on our blog at Sideways Markets, you can find all the charts linked up right below the video tonight on the blog. And don't forget, if you have any questions about anything covered in this video tonight, you can always pick up the phone, call that toll-free number, right, or drop me a comment in the comment section below. And while you're doing that, if you like what you see here tonight, please help support this YouTube channel by subscribing, and when you do, hit that bell icon so you get notified every time I post something new. And as always, it's great to be here with you guys and gals once again this evening, but let's not waste any more valuable time. Let's get ready for tomorrow morning's trading session by taking a quick peek at the schedule for tomorrow. Tomorrow's Thursday, November 29th, and of course, continuing what we talked about in last night's newsletter, the next 48 hours, next 2 trading days as we go into the end of the month. Like I said last night, end of the month, we do expect to see increased volatility. So keep your eyes open on that. We should probably see some increased volatility going into the rest of the week and the rest of the month. Now, digging deeper here into the schedule here for tomorrow, we can see there is quite a bit of news on the schedule tomorrow morning. Tomorrow morning, big news in the London session. We got of course, the Eurozone economic sentiment tomorrow at 5 a.m. We got the CPI number. That's inflation out of Germany tomorrow. So I'll be watching gold and currencies tomorrow. Watch those closely, 5 o'clock and 8 o'clock Eastern time, especially tomorrow morning as we go into that CPI number out of Germany. Anytime we talk about consumer prices, we're talking about inflation. Anytime we talk about inflation, you're thinking gold, right? And you're thinking currencies. So watch your currencies, watch your gold early tomorrow morning. As we go later in the session, don't forget we got typical jobless claims report tomorrow at 8:30. And of course, we got personal income at 8:30 as well. That, of course, will kickstart the session with us in the U.S. morning. And then later on tomorrow afternoon, we've got those FOMC meeting minutes. That, believe it or not, is a pretty big important news event for tomorrow. It will probably mean for an early lunch, a lot like we saw right in today's session because of Jerome Powell, and also too, right, everyone's watching to see if they're going to give away any rate hikes in the month of December, or of course right into March next year. So everyone's watching the Fed speak right now. That's why you had such a big reaction today to see Jerome Powell speaking about right raising rates in 2019. Everyone's reading these minutes tomorrow. I would expect those FOMC meeting minutes to give you an early lunch tomorrow, so a little bit earlier into lunch tomorrow, 11 o'clock, 11:15 instead of 11:45, 12, and then again, beware right of that afternoon session, because after that news comes out, after those minutes hit at 2 o'clock, we're probably going to see a pretty good rally or collapse, either or, into the closing bell tomorrow afternoon. That's a big news. That's a big news event tomorrow at 2 o'clock Eastern time. So quick recap here. Into the end of the month, we do expect to see increased volatility Thursday and Friday. We've got that big inflation number tomorrow morning at 8 a.m. Eastern time. Watch your gold, watch your currencies, and of course, we got jobless claims and personal income at 8:30. But really the big news tomorrow for the U.S. morning, or the U.S. session overall, is that FOMC, not the announcement, but the minutes, right? That will be the minutes from the last meeting that we had a couple weeks ago. And again, expect to see an early lunch, right? Earlier than normal. We usually trade until about 11:30, 11:45. Earlier lunch, right? Traders will leave early so they can come back and be ready to digest those meeting minutes. And again, if you're around tomorrow afternoon, right, keep your eyes open, because we may see some fireworks into the closing bell right after those Fed meeting minutes come out tomorrow at 2 o'clock Eastern time. Now, don't forget, tomorrow morning, we'll have a front row seat for that CPI number tomorrow. So be there with me tomorrow in our trade room. We open up every morning at 8 o'clock Eastern time, and we'll have a front row seat for that big news tomorrow morning. Now, let's jump into some charts here right now. My plan tonight is to get these charts ready, get our strategy ready, and that way we're ready for all of us to trade together tomorrow morning in our trade room. If you're not with me tomorrow in the trade room, the next best thing is to grab all the charts. They're linked up below the video tonight here on the blog. And if not, of course, again, don't forget, we'll be in our trade room tomorrow morning executing this strategy with all of our advanced members. Starting off tonight on oil. Oil is bearish with a spike down to the low of the weekly trading range, which is a major support level. But it's too bearish to try and buy this low, so my plan is to wait for the sellers to try twice going lower, then use the nested two-try failure pattern to buy back into that range tomorrow morning. Now this reminds me here, right, this big spike down here, right, on the crude today. We saw a lot of spikes both up and down in this afternoon session. And so what I thought about is let's go over quickly here the kind of 4 basic ways in which, right, you're looking to trade those spikes. The first one is going to be the most common, which is the spike and channel. A spike up into a bull channel. A spike up into a bull channel tells me to look for prior swings near the base of that channel and wait for that pullback to be able to buy it. All right, spike and channel. That's number one. Number two is a spike and range. Spike and ranges. These are in order of how common we see them. Spike and ranges. If we see a spike up, we go sideways in a range. When I have a spike and range, I take the size of that range, right? Size of that range, copy and paste it down, and that will create a level of support. I like to use that level of support for my 1-2 try failure pattern. 1-2 try failure, and we're buying into that second try failure, going back up into that range. That's number 2. Number 3 is going to be a spike into a wedge. Again, very similar to a spike and channel. We don't see these as often, right? Spike and wedges are really great clues. They're very similar to a spike and channel. One of the key components to a spike and wedge is how narrow that wedge gets. Once it gets too narrow, keep your eyes open on the base of that wedge. Look for that deep pullback, right? And buy off that deep pullback. Where's my target? My target then goes where those wedge lines collide, right? So it's a little bit different than a spiking channel, very similar, same spike up, pull back. Again, watch the base of that, right, of that wedge. That's number 3, right? That's number 3. So we got that spike and channel, that spike and range, spike and wedge. What's the other one? There's one more, right? 4 ways to try to spike up. Yeah, into a flag, right? Into a flag. These are the rarest of all of them. I'm surprised we don't see more of them. They happen a lot. They happen a lot more frequently before, but we haven't seen a lot of them lately. Whenever you see a spike up, but then we start seeing those lower highs, right? That's how you know it's a flag. It hasn't collapsed. It's not bearish yet. Right? We haven't seen that market collapse yet. We're still bullish overall. We're just pulling back. The problem is you don't want to buy into the high. What I like to do is I like to look for one of 2 patterns. Either A, it's a 1-2 failure, or B, it's a breakout pullback, right? Either a 1-2 below the range, below the channel, right? See how I'm drawing this right now? It's below the channel. Look for that 1, look for that 2, and you're buying into stops, right? Going back up into that, right? Into that channel there. The other, of course, is that strong break up. It's got to be strong enough to get that moving average over, and then we look for that buy, right, off the high, that breakout pullback, right, as we go. So again, we got 4 different ways to trade a spike, right? You get your spike and your channel, buy the dip of that channel again towards the base of that channel. You've got your spike and your range. This is very, very common, right? Spike and ranges, 1 try, 2 try, failure. Don't forget about the spike, right, and the wedge. Spike and wedges are not as common. I wish they were. They're great patterns. Spike and wedge. Don't forget spike and wedge once we get close to that narrow point, right? Look left, right? Find that base. Look for that deep pullback, and up we go. And then what was the last one again? You got it, the flag pattern, right? Flags. Flags tell me there's 2 options for a flag. One is the overshoot double, right? That 2 try, or the breakout pullback up above those highs. How about one more? Right? How about one more? How about we throw in one more as a bonus, right? The 5th way to trade a spike would be a reversal, right? How do we trade a reversal? How does a market reverse when we have a spike here? Well, the first thing is, and we'll go back to last night's newsletter, talk about from last night's newsletter, what we want to do is we want to make sure, first of all, right, that we get below that moving average, right, and really get some separation below it. Then I look for that little trap, right, and drop it in from there. What will happen is buyers will come in, they'll try to buy above that high. But once we see that separation away from that moving average, now we know there's sellers up here, right, and they're looking to sell into. Basically, once those buyers sort of buy that move up, right, those bears will come in with a big strong red candle and they'll dump that sucker right back down. So that would be the 5th way to trade a spike, would be wait for what we call the 2 try failure, right, that trap, and that drop back down in. So that'll be the 5th one now. And now that I think about it, we see these across all markets pretty much every single week, and I have hundreds of examples of all of those spike patterns already included in my free trading course. If you go in the upper right hand corner right now, I'm going to drop a link up here for you. Grab that free course, and that will teach you more about spike in channels, spike in ranges, spike in wedges, and I'll go into a lot more detail. I know I covered those relatively quickly here this evening. I want to make sure we're not here all night on this video, but if you want a deeper dive into that, grab that information icon in the upper right hand corner, right, or grab the button. There's a big red button here right below that video tonight. Grab that big red button, join that free trading class, right, and learn more about how the best ways are to trade spikes. So here we are. Here is a spike down, right? Here's a spike down, but here we are spiking down into, that's not good, right? Look where we are here. We are right down at the low of that, right, of that trading range. Not a great place to be selling down here, right? Yeah, not a great place to be selling. So this is one of those scenarios where we're bearish. It's obvious we're bearish, but we're too low to sell. At the same time here, we're way too bearish to want to buy this. So what do we need to do here? We need to either wait for sellers now to either show us proof they want to go lower, possible, not probable, but possible for tomorrow, or we need to wait for that 1, that 2, and then go from there. So ultimately, there are three, maybe 3.5 different scenarios I want to be ready for here tomorrow on crude oil. The first one is, what would it take for the sellers to be able to keep this party rolling lower? Well, first of all, I've got another range expansion down at 48. So we've got to get below 48 for me to really take this thing seriously to the downside. Where did I find 48? I took the size of the range. I then copy and pasted it down. You can see it already held there once as support, right? And did it again. Okay, in my experience, if we can get out of that second range expansion, we should be clear to go. But that should also be a fair warning here. If we just get one more leg lower, it's not going to be enough to really get very confident here, right, to start looking for a sell. So what I'd like to see is, I'd like to see another leg lower and keep going. And if that's the case there, then I'd be happy to start selling. It'll probably end up being a spike in channel. So if we end up seeing that move lower, we get through that 48, now we know it's a spike in channel. We just talked about this, right? What's the plan for a spike in channel? The base of that channel, right? Wait for that move up. It'll be a trap pattern, right? Maybe a buyer failure pattern off that spike in channel as we go lower. Be very careful trying to sell this market as it tries to go lower. So what's the plan then to be a buyer then? Well, there's really two different types of buy scenarios. One would be a full 2-try failure, and the other would be a nested 2-try failure. Those are the two basic principles here we're looking for to be a buyer here right now. Here's the first one, right? Here's the first one. Strong move down. Anytime we see a strong move down, we're expecting to see another leg. Let's give it to them, right? Let's just say for this example, they get that second leg, we get that lower low in price. The bears are happy, but more importantly, there are going to be sellers now who are confusing this as a breakout. I want to now look for those sellers to get into trouble. The moving average now will come over. We'll look for that 1 try. We'll look for that 2 try, and we'll buy back up from there. 1 try for the bears, 2 try for the bears, buying back up from there. Again, this is what I hope we get tomorrow. Strong move down, let the bears try it, give it to them. Don't fight it, don't fight the momentum, give it to them. They get that lower low in price. Moving average comes over, right? Bears now think this market's a breakout. They try to sell first. Now that didn't work. They'll try it again. If that doesn't work, they're going to give up on this, and we're going to buy right into those stops, right, as we go back up into that range, right? I call this a major 2-try failure pattern, right? Lower low in the second try, then you've got your nested 2-try from there. Speaking of nested 2-try, what if we don't get it, right? Good example back here. Right, we go lower, we don't get that second leg lower. You'll notice what happens though, right? The bears, they try once, the bears try twice, and blast off. That's the next option we have as we go higher. Strong move down, we don't get the lower low. Again, that would be ideal. We don't get the lower low, we get back to the moving average. Get that drawn on, back to the moving average. Bears try once, we go up, bears try twice. Once we see those sellers, they've tried once, they've tried twice. Now we know where stops are, right? And we're buying right into those stops as they go higher, right? For an added level of what's the word here? For an added level of confidence, I like to look for traps here. So if I can get a trap off of that little low right there, ooh, baby, that is a tasty opportunity there to the upside, right? A nested 2-try with a combination trap. And boy, oh boy, wouldn't it be nice if it was right off of that low as well, right? So again, it's a strong move in one direction. It's a spike. We're at the low of that range. I don't want to sell down here. It's a 1, it's a 2, it's an up, or, right, it's a major 2-try with a 1, 2 up from there. Now, what if it just jumps? What if it just jumps up? Then what do we do? Right? If it jumps up, right? If it just jumps up here, now what I'm waiting for is not a pullback, but I'm waiting for a little seller failure below the moving average. My biggest threat here is going to be this trend line coming down. And one of the classic mistakes is when the market starts racing higher, we chase after it. Rather than chasing after it, I'd rather wait for those bears to get below that moving average, right? Let them try once, let them try twice, and buy into their failures. Remember, when a market has this much momentum, your best bet is to wait for the sellers to try twice and buy into their failure, rather than trying to just predict the bottom. That looks good. Oil is locked and loaded. Tomorrow morning, don't forget, 8 o'clock Eastern time, right? We're going to see what we get here and execute the strategy together in our trade room. Next up, how about some S&P? S&P is bullish with a spike in channel, just a few points away from last week's high. The spike in channel tells me to wait for a big pullback, right? We talked about that earlier. And the prior week high up at 27.48 reminds me that we are running out of space. And anytime we run out of open space, we always know to look for traps. So one thing's for sure, we're bullish here right now, right? Second thing is, let's get this out of the way here, see where that measured move is. Second thing is, there's my spike in channel, right? Now, what do we talk about spike in channels? We talked about, right, find those prior swings, the lower the better. And look for what? And look for that nice deep pullback. Okay. Now, we also know, right? We also know that prior week high is right overhead, right? If you were to look left on this right now, right, there's a bunch of crap, right, waiting up there around 27.50 here, right? A lot of resistance. So the bottom line is buyers are going to be weary of buying into that area. That also tells me wait for a pullback right now. I don't want to be too aggressive, in other words, right, on this S&P. So the most important thing right now is let's find some support levels that we can use, right, to combine with our entry patterns. Let's mark up those highs, bring it down to that low, and boy, oh boy, is that a tasty level of support, right, down around that 27.25 area, right? Hidden channel, we call it. I'm also going to look at this prior swing at 27.24 and a quarter, prior swing 27.17. I doubt it. I really doubt we're going to get back all the way back to 27.17 unless we collapse, right? Unless we reverse, which we talked about earlier on, right, in this video. My plan would be let's get a deep pullback and let's see those sellers. Let's give those sellers a chance to reverse it, right? Let's give those bears a chance to take this thing lower. Right? Get that nice deep pullback. Let those sellers try to sell off the moving average, and let's see what they're made of. Because I know I have a level of support here, and I know that's where more buyers are going to be coming in. So I have a feeling I can probably buy right into those sellers' stop losses. Again, this is the 1-2 try here for the bears. Then I can buy into those stops. Well, if I buy into the stops, I want to be disciplined to chase after it. If it does go higher here now, the next best pattern is to look for what we call a hidden channel pullback. I'll draw that high, right, trend line there. I'll mark up that new low, and now the low of that channel becomes a buy as well. So this is one easy way for me to buy a pullback. Again, I want to buy a pullback for many reasons. One, because of the spike in channel. Two, because of that prior week high. If we can get that pullback, right? Again, this is not really necessary of where it goes. I just want to get a nice deep pullback, right? Let those bears flex their muscles, right? Let me see those bears give it a try, right? Let them try to sell off that moving average. Then we know where their stops are. Once we know where stops are, then we can buy right into their stops. Then we can look for that hidden channel pullback, right? And we can buy it on the pullback from there. Very, very easy strategy, right? Very, very easy strategy on that pullback. Now, I would also be lying to you if I said I wasn't expecting a little bit of a spike in range, right? Anytime we see a market move this far in one session, the following day oftentimes turns sideways. Remember, once we have a spike in range, what do we like to do? We like to mark up that level of support below us. How do we find that again? We measure the size of the range. We copy and paste it down, right? Pretty easy, pretty easy. The key is finding that range first, right? And I'll talk more about finding ranges tomorrow morning in the trade room. It's also included in our free course as well. But the most important thing now is if we do see a range, find that level of support, and then we look for that one try, look for that two try, and then back up we go from there. One try, two try. We call this the two-try failure pattern, right, if we go sideways. And then last but not least, what if we keep going higher? If we keep going higher here, not much changes. We're still dealing with a spike in channel. We are still waiting for that deep pullback. We'll still want those bears, right, to show us what they've got. and we're still going to buy into their failure, hopefully incorporating, right, the low of that hidden channel for tomorrow. Now, how does this market reverse? What does a reversal look like? A reversal would have to use what we call that 1, 2, 3 reversal. Okay, very similar to a 1, 2, 3 breakout. First, number one, I need a strong move against the current trend. Number two, I want to see a pullback to the moving average. And number three, no, do not sell that pullback, because that pullback usually fail, and guys like me will buy right into your stops, right? Nothing worse than watching it fail and buying into those stops. One, two, and then three off of that, right, off of that moving average. That is a deep pullback, a test of that moving average, and then a blammo, big jump off the moving average. That will get that momentum going back in the direction of those bears. At that point now, we're going to mark up that low. That creates resistance. We're going to mark up that low. That creates the low of a channel. And then up at the high of that, all the way up at that high up there, right? We call that a hidden channel. And now we know where we want to sell. I want to sell off the high of that, right, of that hidden channel. I like to include that prior low along with the high of that channel, right? That'll make for a great spot there for the sell. And then where would our target be? The easy target is right back where Jerome Powell got things going today. Right back where this whole party started, right? So think about this whole move being erased, right? It goes all the way back to 12 o'clock Eastern time, right around that 95 to 90 area, right? Give or take a few ticks there tomorrow. All right, guys? So don't forget, it's the 1, 2 failure into hidden channel, right? It's the 1, 2 try failure off the range, right? Or it's the 1, 2, 3 reversal, right, into hidden channel pullback, right? Relatively easy patterns. And again, if you want a much deeper dive into all of these patterns, I can't cover them right now. My goal tonight is to get us ready for tomorrow morning's trade room session. But if you want a much deeper dive into all the entry patterns, grab that information icon. There's that big, right, that big information icon upper right hand corner, or grab it with that big red button right below the video tonight on our blog here at Sideways Markets. Looking good. Let's keep going here. Over to the Nasdaq now. The Nasdaq, very similar to the S&P. We talked about this before, right? We're bullish with a spike and wedge. Here's a little bit different look, right? It's a little bit different look here. It's a bull spike up into what is pretty clearly a wedge, right? You can see that wedge here. Okay, now what does a wedge tell us? A wedge tells me that as soon as we start getting too narrow up here, what's going to happen? Nobody's going to want to buy without very much room up there, right? So the best thing to do is wait for that deep pullback, right? Wait for that deep pullback. Where could we look for support here? I've got a prior swing, right? A double dip swing, a prior swing high, prior swing low. That's a great level at 61.25. I've also got this hidden channel. You know me, I love those hidden channels, right? That's a key level of support. Isn't that a great spot right there, right around that 68, 60 area? That will be wonderful for a buy tomorrow. Now, we talked about a number of patterns here already on the S&P, right? We talked about that deep pullback, right? Let those sellers try their best, right? Let them do their best there to buy, right? To sell off that moving average. We'll buy into their failure. But another pattern we oftentimes see in these kind of runaway markets is what we call the two-legged pullback. And that would be a strong move down, a pull back, and go, right? Hence the name two legs, right? One and two-legged move. Once we have that two-legged move, then I can look for it up, back, and I can actually use that trend line, right? Not the bull trend line, right, but the bear trend line, right, that red trend line. I can use that resistance trend line as a level of support, right? Always a really great, reliable opportunity right off of that low. So there's definitely a handful of different ways we can do this, right? Again, we're bullish. We know we have that prior week high. It's right overhead. I'm not going to want to buy into that high. I'm going to wait for that deep pullback. Right? Will that deep pullback be a two-legged pullback? If that's the case, we'll draw that trend line over. We'll use that trend line as support. Or will it just slice lower? If it slices lower, right, then we expect to see those sellers trying to sell at the moving average, right? and I'm going to buy right into that failure as well. Okay, so very similar to what we talked about in the S&P, a little bit different obviously because it's a wedge. And then don't forget, it's also a good idea. Let's be prepared here for a possible range, right? How do you know when the market's a range? Double tops. Anytime you see a double top, and it doesn't need to be perfect, okay? I do not need perfection, okay? It just needs to be close. Anytime we see a double top, triple top, double top with the highs, I now know it's a range. Once we know we have that range, then we know take the size of that range, bring it down, create support, right? And then, of course, look for that one try, two try. One try for the bears, two try for the bears, and then up from there. Let them try once, let them try twice, right? And then up from there. And again, remember too, I'm going over the basic ideas here for tomorrow. We'll execute this together tomorrow in the trade room at 8 o'clock Eastern time. But remember, there are lots of variations of that two try, right? There's the major two try from there, right? There's the nested two try. There's a lot of different variations of that two try. And again, if you want a deeper dive into that two try failure pattern, grab that free trading course, right? You'll love that free course. Talks all about, right, those two try patterns and everything else that we do every day in our trade room. And then what if we keep going higher? If we keep going higher, doesn't really solve much, right? If we keep going higher here, the problem still remains. We're still waiting for that deep pullback, that second try for the bears, right? The bears will try to sell off that moving average, and we'll look to buy off of support into those stop losses, right, of those sellers. What does a reversal look like? Reversals, 1, 2, 3, reversal. 1, strong move down. 2, the moving average test. Got to hit the moving average. If it does not hit the moving average, it doesn't count. And then 3, blast off that moving average. Remember, do not try to be the one who predicts that reversal, because those reversals almost always fail, end up right back up to retest the high. That's the pattern I'm looking for tomorrow morning with you guys in the trade room. If we do see that strong move down, remember, mark up that low, find the low of the channel, and then all the way up top, right, grab the hidden channel there, and then bingo, now we know where that sweet spot is to sell back down. Where would the target be if we can reverse? Right back to where my boy Jerome Powell opened up his mouth this afternoon, right? Right back to that point where this whole party started. That's an easy target if we can get that reversal. Again, we know to wait for that momentum to turn by making sure those sellers get the momentum back on their side. Let's keep going. Nasdaq and the S&P are all looking good. How about some gold right now? Gold's bullish as it races back into the weekly trading range. And with this strong spike into what looks like a range, my plan is to look for buying opportunities below the range using that two try seller failure pattern tomorrow morning. Now, I do want to give you guys a heads up. I am on the 12/18 contract right now, but as I'm watching this here, it's about 6:45 Eastern time right now. You'll notice, right, we are kind of sharing volume right now between the 219 and the 12/18. As of right now, it looks like we might be trading the 219 contract tomorrow because, of course, we're trading the 12/18, the December 2018 contract, right, on the gold. Now, I don't want to get too overwhelming for you here because, you know, contract expiration, contract rollover really has a tendency to be confusing for new traders. Here's what you want to remember. You always trade the market or the month that has the most volume. Just remember that. As long as you trade the market or the month, right? This is the gold 12/18. That's December 2018. Well, here we are. We're going right into December. So December's contract in the future is going to expire here soon. So rollover will start rolling over to the 219 contract. If you ever wonder which month should I be trading, just go right to the CME website, and you'll see they'll list out all the months, and just find the one with the most amount of volume and trade that one. So as of right now, if we started trading right now, we want to trade the 219 contract. We'll see what it looks like tomorrow when we start the session off tomorrow morning in the trade room. But as of right now, though, right, and this is always kind of tough on contract rollover because you don't really know what you're going to get the following day. But right now, it looks like we're probably looking at the 219 contract. It'll, chances are, be very, very similar to what we're seeing right now. It's just these prices on the right-hand side will be a little bit different. That's all. Just be a little bit different on the right-hand side. So, first of all, let's get that out of there right now. Range. right, range. And we talked about this in last night's newsletter, right? We got this range. It's very similar to we had on oil, except oil, of course, is down here right now. We're going to look for that move up, right, on oil tomorrow. Gold already made this move. So gold is trying to get this pendulum swing. I've got the amount of the move below the range, projected up above the range, right? Market moves down, pendulum swings back up. So we've got some pretty beefy targets here for those gold bulls, right? Back the top of that range at 28.5. Possible measured move, right? Up around the high of that range expansion. But don't be surprised here if we go into December, right, and we're all the way up around that 1240, 1245 area here after this thing whips back in the opposite direction. Now, for right now, all we know is this. We know we're back inside the range, and we know we're bullish. That's pretty much all we know for sure. Everything else is relative speculation right now. And again, we're probably going to get rollover for tomorrow, that 219 contract. Okay, so here's what we know. We know we have a strong spike higher, right? And we're seeing what looks to be like a range going sideways. Now, we talked about the five actually, right? A little bonus in there. We talked about the 4 ways to trade a spike. This is what we look at as spike and range, right? Spike and range. If you really want to be nitpicky about it, it's a little triangle, right? Triangle, potato, potato, I don't care. It's a range, right? It's a range. So when we have a spike and range, what do we look for? We look for the 2-try failure, right? Anytime we have a range, we look for a breakout failure. Let those bears try once, let those bears try twice, and look to buy going back up into that range. Relatively simple plan here. And remember, if it goes real strong, right, look for that nested 2-try. That 1, that 2, and up from there. Okay, so again, it's a 1, 2, back up. Let those bears try once, let them try twice. Right? If we get the major 2-try, even better. If not, if all we get is that, let's get this out of the way there. Now you know what I'm looking for, right? If we get it a little bit stronger, nested, 1, 2, right? Now the bears try once, the bears try twice, bam, right back up we go. Basically what you're doing is, if we get that strong push lower, what will happen is you'll have a lot of sellers who will try to sell into that pullback. And as it goes higher, once they fail, twice they fail. I mean, how many times do you really think those bears are going to keep swinging at it? They'll give it at least 2 tries, and once they see it fail twice, those sellers, yeah, they're going to cover and they're going to become buyers, and this thing will rocket going back higher here. So I want to see it pull back so we can buy nice and low, right? What if it keeps going higher? What if I'm wrong? What if I'm wrong? What if this turns into a spike in channel? Aha! See, there you go. What got you there? What do we do then? Spike in channel, what do we do? The key here is it's a range. And remember, we talked about this last night, guys, right? Anytime we have to choose what comes first, a range or a channel, what's more important? Range, right? I'm trying to think. There's no rock, paper, scissors. I'm trying to think like it's a rock. Yeah, there's always one that beats the other. Imagine if there was a rock, paper, scissors. Imagine if there was one that beat everything else, right? My little monkey brain right now is going, doesn't rock beat paper? No, it doesn't. Paper beats rock. So let me back this out here. It's almost like rock, paper, scissors had one that beat everything, but then that game wouldn't work really well, would it? I'm playing around at this point. But the bottom line is, whatever we have, all kidding aside, yeah, paper does beat rock, right? Yeah, scissors beats paper, rock beats scissors. Anyways, moving on. Again, I didn't say I was the smartest guy in the world. I just try real hard with you guys every night. We know that anytime we have a range, the range beats everything else, right? And so because we have that range, if we go into this range going higher here, your main priority, I took a roundabout way to get to this explanation, didn't I, guys? Sorry about that. Luckily, I'm not charging by the minute. So I want to get back and buy as close to the low of that range as possible. That's kind of the moral of this lame rock, paper, scissors analogy. Which quickly blew up my face. Yeah, you got it, Joe. So again, if we go higher here, right, you just focus on the low of that range, right? Focus on the low of that range, get down, right? Again, get down and then up from there. We want to buy off of that low of that range down here. And what'll probably happen is if we do go higher here, right, you'll probably have a couple different opportunities here as we go back up. First of all, right, watching for traps, right? Watching for traps, trap pattern into that nested 2-try, Those are two easy ways, right? One is a trap low. Two is that 1, 2, and then go. Right? And again, I'm covering these real quickly here this evening. I want to give you a much deeper dive into all of these entry patterns, right? And I'll see you inside the member section of that free trading course, which you can grab. If we keep going sideways, just keep staying patient, right? If we keep going sideways here, keep staying patient for that 2-try buy back up. And again, even if we do collapse back down again, I'm still going to look for that 1, 2, back up we go. And don't forget about that little trap, right? Don't forget that little secret weapon of mine. I'm giving away too much, I know, guys, right? But that little trap right there, right? Little 1, little 2. We've seen a lot of those over the past few days in the trade room, right? So grab that for the move back up. Bottom line is we're too bullish to sell. We want to be a buyer. We want to buy low, right? Buy low. And again, we got some great targets waiting up overhead, right? At that 28.5, at that measured move. And then again, if you have a chance to hold the runner tomorrow, hold that runner because this thing could get really good as we go pushing higher. Looking good. Gold looks great. Again, watch that rollover for tomorrow. And then last but not least here, let's wrap it up on the mighty euro. The euro is bullish with a strong spike higher, which tells me this market, right? This market is extremely bullish, right? It's too high to buy though. So I want to buy at support levels tomorrow morning, right? Where's my support levels? Well, first of all, I'm going to connect these two highs. Connect those two highs. And we've talked about hidden channels before, right? Connect two highs, bring it on down to that low, and that will create, right, that hidden channel. So that's an easy spot to look for a reliable buying opportunity. I really, to be very honest with you, I really have my eyes on this little area right there. On a faster time frame, this will be a trading range. And anytime I have a chance to get into a trading range pullback, that whole area right there around that 13,700, 13,600, right? That area is really looking good here. So we know we're bullish, but we got such a big move up. I'd like to see a pullback so we can buy nice and low off a level of support. Now you can almost already tell what pattern we're probably going to want to use on this as we come down off those highs, right? We're looking at this now as a trend line, and I want to try to use that trend line for my buy overhead. You can almost kind of see that trend line starting to give us a little bit of a clue ahead of time. Another option on this, if we do get that strong move down, get that moving average coming over. Let those sellers try to sell off the moving average. Make them show us, right? Show us you mean it. Once we know, right? Once we know they're selling into that moving average, now we know the stops are. We can buy into those stops, right? With a seller failure pattern, we can then look for that hidden channel, right? And we can buy into the low off that hidden channel pullback. So plenty of different ways to get into this thing as it pulls back. We just need to see the market pull back. What if it doesn't pull back? What if it turns sideways into a range? How would we know it? Double top. If we go back to the high and double top, now what I'll do is I'm going to still leave that trend line there still. And now we'll do is we'll look for the same thing. 1, 2, right? That 2-try failure. It's a little bit different than the seller failure because we really want to see those bears try once, let them come back, try it again, give them 2 chances, and then we'll buy into that second try failure. At that point, it'll be easy to get those sellers to freak out, right? Cover their short positions, and the market will usually race right back up. Now, what if we go higher here, right? What if we keep going higher? What if we keep blasting higher? If we keep blasting higher here, we're just going to keep on ratcheting this stuff up, and we'll just keep waiting for, right, that pullback. I know it's tough sometimes. It's tough sometimes, especially when you've got what really is a short covering rally here, right, from that big move from overhead. That's what's going to cause this market to really jump higher here. It's not buyers buying it. It's sellers buying it. Usually what happens, though, is when a market moves this far in one move, though, right, maybe it's a flag, right? Maybe it's a flag, strong spike up into a bear channel. What do, right? 1, 2, breakout, pullback. Those are the 2 patterns to look for when it comes to a flag, right? You get the breakout, pullback, the 2-try failure below it. We talked about this at the beginning of tonight's video, right? So this might turn to a flag pattern, watch that falling resistance trend line, get above it to buy, or, right, if we get an overshoot of that low, that overshoot can really be a great spot for us to buy there tomorrow morning. Guys, speaking of tomorrow morning, my goal tonight is to get the charts all prepped up, get us all in the right mindset for tomorrow morning's trading session. And don't forget, we're going to execute this strategy together with all of our advanced members. We open up every morning at 8 o'clock Eastern Time. We start off tomorrow morning by going over all of our patterns and our rules, and then we'll jump in and execute that three-step strategy, which, again, if you want to learn a lot more details about the strategy, I've got a great free trading course as part of our free trial. I'll also send you an invite. Come out and join me as a guest in the trade room. Learn more about our 3 levels of membership. And don't forget, I'm always here. I know that most websites are all automated these days with robots, but I'm old school, right? You call the phone number, I'm going to answer the phone. You email me, I'm going to email you back, right? I'll see you tomorrow morning in the trade room. If not, we'll do it again tomorrow night, same time, same place as we go into the end of the month of November. I can't believe I'm already Christmas shopping right now for my friends and family at the end of the year. I can't believe where this year went. It's been a great day though. Tomorrow morning, more opportunities. Hope to see you guys there with me tomorrow morning. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.